Per usual, living on this channel for educational purposes only and is not intended as financial advice. It is Setup Sunday here once again. Let's take a look at some charts. People keep asking me, am I bullish? My response is, in the near term, what evidence do I have to be bullish? I don't have a lot. There's a few things on BTC. There's maybe one thing on ETH. Crypto right now just ain't the move. And it might be like that. It might be just seasonally choppy until October at this point. So you got to sit tight. You got to have a long-term mindset. If you are buying here, be very careful with leverage because we are teetering in a few ways. I'll get to that. We can look at post-halving movements. Most of those have been around the 25-week mark. You know, basically I'm looking for when do things really get started post-halving. We are already ahead of schedule post-halving. We don't have 100,000 data points here, but we have a few, and we're still early relative to what we've seen historically. So to have this just blanket expectation that we should just see more, we've got ETFs, we've got institutional money, but not really. We've got ETFs, but we don't have wirehouses. We've got ETFs, but we don't really have positive flows. We'll look at that. So for every bullish argument, there is a bearish yang to the bullish yin. So yes, this is bullish eventually, right? It's not bullish tomorrow, and that isn't enough to overcome whatever we're seeing now in the market, whether it's Germany just fire sailing or whoever fire sailing perpetually or miners, you know, go down the list, right? And I'll look at that. But there's just not a lot of people buying. Price is telling you that, obviously. Looking at daily instead of weekly performance since halving, it's usually about 100 days in, we tend to see something more bullish. So it's day 64, right? Sit tight. I would not do anything dramatic here for the DCA champions and warriors out there. This is what you want to see. You want to see extreme weakness. You want to see perpetual weakness. You want to DCA during a bearish period. You get more bang for your buck. So don't get scared away there. Just because I'm bearish near term or just basically neutral near term does not mean for a second I don't think we're going to go into six figures plus this cycle. It's going to take some time. It's going to take some time. We're not there yet. Looking at drawdown potential, comparing this to 2016 and 2017, we're talking about 30% is where we tend to eventually bounce. 30% here would be 52,000. There's some confluence for that. Do I think we're going there tomorrow? No. Do I think we're going there next week? Also no. Is it possible we have a 30% drawdown from all-time high? Sure, anything's possible. Do I think the cycle's over? No. Do I think your alts are going to survive? No. Alts are going to get just absolutely obliterated, okay? So there's some little things you can do to move the chess pieces on the board to make yourself a little less exposed to massive mega drawdown, but I can't trade your book for you. But I can tell you what I'm doing, and I'm not denominated in alts here. I have very little in alts at all, because if you're a little bit bearish on BTC, that means you're probably going to see extreme bearishness in alts. Nothing will save this. Not even ETFs will save ETH, okay? That's one thing that's going to be super interesting, is just to see how bearish we are, potentially, if we get these ETFs first week of July. Is that going to be enough to save this market? Is it going to be enough to save ETH first, right? ETH, ETH may get a lifeboat. I don't know if everything else is going to get a lifeboat, but ETH may kick or take everything up with it, kicking and screaming. I just don't think that's going to happen. Looking at seasonality from the seasonality guru on the legacy side of things, Almanac Trader, what he's basically sharing here is what we've come to know since most of us have been here for a long time, which is Q2 is generally a bullish period, and then Q4 is a very, very bullish period. So that's what he's showing here, and he's highlighting this pocket of weakness that we're headed for between July and October. Wake me up when September ends is a thing for a reason. September usually not a great month. It's not even July yet, but again, I would level set some expectations here. Unless we see something change in the market, Sailor, Dell, some country, I don't know, Powell pivot, Biden drops out, which I don't even think would be bullish, because that would probably mean Trump would lose against anybody else. You know, we could go back and forth, and I don't think there's anything here right now that's going to have an outsized effect above whatever selling's going on. Miners could stabilize, Germany could say we're done selling, right? There are tons of things that could happen, but until we see that happen, it's hard to say this looks good here. This is hash ribbons. You're basically looking for minor capitulation. Any highlighted red zone is minor capitulation. You can backtest this and you can say, okay, when the miners are done capitulating historically, that tends to be a pretty decent sign that we have bottomed. It's rare that we do not attempt a move higher after miners capitulate. It's rare that we move up through a minor capitulation. What this is really looking at is the hash rate, 30 and 60-day hash rate. We zoom in here. It's close. It's back and forth, right? Even with miners being done capitulating, this is not publicly traded miners. Most likely, this is everybody else we don't hear about, right? This is the hundreds of farms that are just not profitable here at this price point, based on revenue, based on electricity, based on transaction fees, whatever, right? Those are the miners that are having trouble here. Or they don't have the latest and greatest technology, ASIC-wise. Based on what we're seeing on the weakness in hash rate, there is still some minor capitulation going on. We're not seeing hash rate skyrocket up here. So that's also going to have a drag on price as they are sort of being forced to sell their BTC to pay for bills. That's the general argument broadly there. Looking at the ETFs, we haven't gotten any help from the ETFs at all across the board. It's basically been outflows from everybody for several days here, except IBIT. No negative days for IBIT, but not much help from anybody else. So until we see this flip, it's hard to be bullish. It's easy to say, I don't think we can go down. We've got ETFs, we got XYZ. You can do that, but the reality is price is down $200 every 5 minutes. That's what it feels like, just perpetually here, right? So we just don't have the flows. We don't have the urgency, the catalyst, whatever you want to think of that as. We just don't have it yet. Looking at the basis trade, we're still around 10% there. OI on futures, CME, kind of flat. So we're not seeing a bunch of people pile into the basis trade, and the flows are kind of telling you that. We're not seeing people pile in or out for that matter. Looking at one of the charts from Coinbase, this is a chart I made a couple weeks ago, but looking at the real numbers here, spot BTC ETF AUM minus CME open interest, and this gives a better picture on ETF AUM. And yes, it is up since day 40, but between day 40 and day 100, we're not seeing as big of a change as we did from day 0 to day 40. So we know what we need to see to get bullish. I do. We're not seeing it, right? We're seeing just unloading of BTC. This is a graph of German government holdings of BTC. They had been selling. Some of this happens before the coins are moved, just like the GBTC stuff. Like there's a pre-settlement period, possibly, I don't know who they're using here for OTC. It could be a bunch of OTC providers. But just because it hasn't happened here doesn't mean it isn't happening on exchanges, or just because it's moving on chain here doesn't mean it will happen on exchanges. So just keep that in mind. This just gives you a rough estimate of when selling may be occurring. Are they going to sell their whole stack? I have no idea. They could. I have no idea. I haven't heard solid numbers, but until we have someone coming into the market or a collective coming into the market and buying this, we will see sell pressure. We're also seeing people starting to pile on the short side, just knowing that this selling is happening. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PBI, DBA, Kraken. Volume-wise, Bitcoin at the top here, Sol, ETH, some memes, some layer 1 stuff. There was a hack on BTC Turk. A bunch of AVAX got sold. A bunch of it got picked up by Binance that got frozen. So there was a lot of negative movement on the AVAX front thanks to that. But for the most part here, not a lot of positivity that we're seeing. And just as a reminder, you can trade FX on this in case we see some opportunity in FX land that you wish to take advantage of. That's there with the euro weakness. There is, of course, PAX G as well for those gold enjoyers looking for gold exposure. And on the charts here, a lot of people have noticed that there's been divergences between Coinbase and Bitfinex, or Coinbase and Kraken, or just divergences price-wise relative to the index. And if you think about this, where does most of the bullish buying or bearish selling happen? It tends to happen on Coinbase or Bitfinex, depending on who's buying or selling. Sometimes it's Kraken, depending on OTC providers. But what we're seeing now is not what we saw in February. What we saw in February was a discount in dollar terms on Bitfinex, a premium in percent terms on Coinbase, and we saw a large bullish move off of that. Here we see a Bitfinex premium and a Coinbase discount, which tells you there's a lot of selling going on Coinbase relative to Bitfinex, or someone's loading the boat and longs on the Bitfinex side. But this is definitely something to watch, just super easy. If this selling pressure lets up, then maybe the sellers are done. This could also be ETF type selling. We don't know. Could be a lot of things. If you look at the longs of Bitfinex in the white line here, this has also been highlighted by people who, I'm not going to say it's cope, but it's a little bit of cope, right? Yes, someone is going long in this market. This white line is rising. Okay, that's a lot of BTC. It's not notional, but it's not nothing. Okay, as price is going down, we are seeing somebody open up longs here. Great. Thus far, it has not mattered. Okay, it hasn't mattered. Not saying it won't matter ever again, but clearly it hasn't mattered. Price is just still crushing lows here day after day. Funding on an aggregated basis still positive. We don't generally bottom out until funding flips negative on an aggregated basis, which is hard to do. This is, I don't know if they listed here, BitMEX, Binance, Kraken, Bybit, right? It's all of them aggregated together, still positive. Not turbo positive, but still positive. So someone is still taking the other side of this trade, as evidenced by the Bitfinex long OI rising there. And really, this has been kind of the bigger problem, is our divergence from TradFi. QQQ, SPX up over the past month. Gold down, kind of flat, basically. Here's ETH and BTC, definitely going the opposite direction from TradFi. And then there's stuff like alts. Here's just Sol as an example, down 25% in a month. And that's not great. I don't know what else to say on the bullish side. There just isn't a bullish argument here. The Sol charts look worse than the BTC charts. We'll take a look at that. We also have low time frame liquidity concerns. Yes, I know of the global liquidity cycle where it's zoomed out. I get it, right? But right now, we are not seeing a jump in M2. A lot can happen to change this. A lot can happen where things start exploding, the Fed steps in, blah, 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 right? It's easy to say, oh, I know this is going to happen. But the reality is it hasn't happened yet, and we're not seeing a response to match the issues that would potentially be cropping up, right? So the weakness makes sense. We're just not seeing any bullish evidence. I don't even have bearish goggles on. I have bullish goggles on. They're firmly fastened. They've been fastened since October 23, if not earlier. But we are just not having a good time up here, trend-wise especially. Maybe the first ever, I'm going to call it a failed bullish TK recross with price above cloud. We did not make a higher high from the previous rally there. And now we are closing inside of the cloud. We don't have a bearish TK cross. So the probability that we shoot to the bottom of this cloud is low at this point. But the moment we get that bearish TK cross, that probability increases. So we're basically at this point in January where we've moved from bullish to neutral. Bearish would be below the cloud. So we're distinctly less bullish than we were. There's always a risk that we reach for the other edge of the cloud. But based on backtesting, most edge-to-edge moves happen after a bearish TK cross. So if we get a bearish TK cross with price in the cloud coming up here, then the likelihood of a move to the other edge of the cloud is pretty high. So you as the trader have to do with that information as you will. Nothing, something in between, doesn't matter. But we are not bullish here in the near term. There's just really no other way to slice it. So the cloud really doesn't like that on high time frames. Here's an example of the TK crosses and what tends to happen pre-TK cross, post-TK cross. Was I bullish last week? Of course, we were above the cloud. Had a chance to save ourselves on the Kijun. Thus far, we have not done that. So now we move further and further into the neutral camp. But the cloud is telling you, for a lot of reasons, be careful up here. Be very careful up here. Looking at the pitchfork with some moving averages and pivots. We're teetering on the 20-week moving average. We tend not to drop below that in a bull trend. We've got a yearly pivot at 62.7. We've got the 200-day moving average at 57.6, I believe. Yearly pivot at 52.5. Pivots are pretty simple. They're a ladder. So if we break 62.7 as support, 52.5 would be the level. We also have a VPVR, not on this chart, but a volume area at 52.5. There was a world where we could try to find support in the 50s. Not impossible, where we'd still maintain the broader trend here, but it would look pretty ugly on the chart. And if we're just drifting through supports, there's kind of nothing more bearish than that, where we just fail to acknowledge anything. Nobody cares. We just go lower, lower, lower. This is the 1050 cross, just super simple. The bear crosses are not a good time if you're bullish. So keep that in mind. And if you don't like this, pick a different cross, back test it. But this cross is pretty good at giving you a heads up of what's going on. And right now we are crossed bearish, freshly bearish over the past couple of days there. Might this go nowhere? Might this bounce? Absolutely. I'm just kind of talking to people in the comments who are going to be like, I don't believe this. This is not over. Like, it just doesn't look good. Okay. It just doesn't look good. And ultimately, this is what everybody's looking at, is the M double top. We really haven't seen bearish or bullish volume pull this up yet. This would be a full edge to edge. This would be a chart pattern. This would be a move basically to when the ETFs launched, which would satisfy a lot of people, right? We'd see Bianco just tweet storm after tweet storm. I told you so. We'd see ETF flows coming out. We'd see a bunch of stuff explode. Fine, like whatever. I don't think this is going to happen, but you can't just ignore it and put your head in the sand and say this isn't a possibility. Of course, this is a possibility if we're in the cloud, below the cloud. If we lose 60, if we lose 56, yeah, that's possible. It's all possible. It's just a matter of how do you want to trade this? Do you want to close your longs here? Do you want to hedge here? Do you want to open a short here? Do you want to open a short later? That's up to you. But trend is not bullish up here for sure. Not yet. We'd have to get back above the cloud for that. Weekly Kijun also around 48-ish. So, there's some confluence for 48. There's some confluence for 52. That stuff is not an impossibility if we do not find buyers up here in the 60s. And there are just more and more reasons. Here's the daily B bands. We are crushing the daily B bands. This is not something you see in a bullish environment. That could change in a candle. We could go plus 5K in one candle. People would say, I told you so, whatever. But what I'm seeing today is not constructive for bullishness, bullish continuation, or bullish reversal. I don't even see a low time frame pattern that this could possibly save itself here yet. You could say, well, there's a low time frame bull div, possible. But when you're looking at stuff like this is the 20-week moving average that we're trying to lose. Historically, when we do that with the B bands, it's not good. It's not good in a bullish environment. If you're bearish here, you're sitting pretty comfortably. The other edge of this B band is at 52. You can see last couple times we've broken down below the 20-week. It's been pretty violent. We tend to reach for the bottom of the band. So it's just something to watch for. I don't want anybody to say, I didn't see this coming. This was an impossibility, right? Like, as long as we are crushing lows, that's just where we're headed, right? And again, if we got this M double top fractal, the last time we had one of these, it was interrupted by the Luna LFG fund or whatever it was buying BTC. But ultimately that did go pretty low, and that hit the wheelhouse of the fibs. The fibs here again are 43 to 58. Possibility, not a probability, but that's something to watch. Adding on to the bear evidence would be this head and shoulders on RSI. The only reason I even thought about this was because we just had one of these in February at the very top at the all-time highs. Is it fair to put chart patterns on momentum or indicators or oscillators? I think it's fair. So it's just something else to watch for that could flip bullish if we survive. But until that happens, it's just hard to be bullish. And yes, I know this is a possibility. Absolutely. If for whatever reason we bounce at the low 60s and we get back above the cloud, this is absolutely on the table, but you can't just say this is going to happen until you see further evidence. I wish this happens to all of us as well, but I don't think where I'm sitting today that's a high possibility, but it's something to watch. Definitely something to watch. Then something silly, the moon charts. How this works, okay, you get an up moon and a down moon. It's harder to go down in an up moon. It's harder to go up in a down moon. Again, backtest this on anything. Sometimes it works, sometimes it doesn't. But we've done pretty well at up moon, down moon, up moon, down moon. Harder to go down, but we didn't quite do great. Up moon, down moon, up moon, down moon. We went sideways in that up moon, down moon. Sorry, down moon, up moon, down moon, up moon. So something fun. I don't know, just take a look. All right, let's talk about ETH. ETH looks better than BTC in that it is above the cloud. It has the inverted head and shoulders possibility. And by the way, before the chart pattern police come after me, yes, I know you can't have a bullish reversal pattern at the top. Well, we see it all the time. So of course it can happen. It just, if we're back at 72, we can all have a nice grand party. And much like for ETH, 4K is the level. Trend basically neutral on ETH as well. Doesn't quite look like it's going to survive here at the Kijun at 3400. VPVR level to watch would be 3K and then 2200 if things get really interesting to the downside. The yearly pivots don't quite match the volume profile. There's a yearly pivot at 28, then a yearly pivot at 2K effectively. So not a lot of confluence for support on the way down, but I'd imagine 2800 would be a pretty big level. ETH, just like BTC, trying to lose the 20-week moving average, generally not bullish, generally reaches for the other Bollinger Band on the downside. That's around 2800 as well. Sol, below the cloud, bearish. TK Cross, bearish. Kumo Twist. So if you're still with me, look, I just call the balls and strikes. The trend is pretty clear. The cloud is pretty clear. This is just how it goes. Sol has had a crazy run since October. And until we're back above the cloud with a bullish TK Cross and a bullish cloud, this is about as bullish as you can get from a cloud system perspective. Potentially has a very large head and shoulders on here. Would love to see how this looks around 100. This could save itself easily. It just, that's kind of cope at this point. It's down 25% in a month. We've not seen buyers come in to save this just yet. Unlike BTC and ETH, Sol is already below its 20-week moving average, and Bollinger Band down there is basically at 100. So Sol is definitely more bearish than ETH, more bearish than BTC. This is Sol ETH losing the cloud, losing the chart pattern. And from a trading perspective, seeing this, you can't do nothing, I don't think. But again, I can't trade people's book for them. If you're bullish Sol in 2025, what do you care what I'm saying now? But in the near term, certainly doesn't favor Sol against ETH, and Sol BTC also has a triple top head and shoulders bearish cloud. Does not look good. So expectations there for Sol. Certainly more bearish than BTC or ETH. And then looking at just some of the alts across the board, we've talked about this for a couple weeks now. No bullishness whatsoever. Sorry. This will either resolve to the lows, or you will need to see a higher high on all these charts for me to get bullish again, but there's nothing about this that is bullish anywhere. These are all different variations of heads and shoulders, and those are all bullish reversal signals. So flipping gears to legacy, this is really ultimately the problem. The problem is dollar has strengthened, whether or not that's rest of the world weakening before we are, cutting before we are, or something else. To see the DXY get back to potentially 106 plus, then we start to run into problems, because if we're breaking out of this multi-year range, and if we see 110 plus, I don't think that's going to happen. I don't think we will break 107, but it is on a path for bullishness here. I think the Fed's going to step in and cut twice this year. So I think we're going to see some reprieve on DXY. But if you don't think that, if you think the DXY is going to go to 110 plus, I would not sit in crypto. Okay, crypto's not the move if you think DXY is going to continue to strengthen. We saw that in 2022. We also have UJ back at extreme devalued levels again, with no end in sight here. The Bank of Japan can keep selling US assets, US denominated assets, treasuries, to try to shore this up. Maybe the Fed steps in with a yield curve control program, treasury, whatever, blah, 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 right? We can write a script in where this happens, but it hasn't happened yet. So until that happens, DXY should get stronger. UJ should get stronger, and that will probably hurt the crypto side of things. S&P also looking not toppy, but doesn't look like it has the momentum it did at 5,200. It's pretty far above the TK lines. You can see just the last couple months here, we tend to hug the Tenkin. And if we retrace to the Kijun, that's 5,200. I don't think crypto is going to be super happy about that. And NVDA is really what you need to watch, because if NVIDIA continues to retrace to its Kijun at 108, that's going to send everything lower. Most of the indices that touch NVIDIA are NVIDIA. And that's going to send the semis lower. It's just going to send everything to an angrier place in the near term. All of this is not like it's over, throw your hands up in the air, etc. We're just talking week over week here, but 108 is a possibility. This could be a spinning top. This could be bulls and bears coming to an equilibrium up here, but it is not looking like bullish continuation just yet on NVIDIA. SMCI, on the other hand, I do like this chart. It's just if NVIDIA breaks down, SMCI is going to go with it, probably. So as a trade setup, looks like a bullish continuation based on the cloud, but you have to be really careful of NVIDIA here. There's other stuff, Amazon, Google, Tesla as an example, but here's a trade idea for Amazon with an ascending triangle at all-time highs. That looks tradable to me. Palo Alto Networks also looks pretty tradable with a pretty obvious horizontal resistance level and a stop loss at 308, somewhere down there, 307. Cup and handle, whatever you want to call this. Gap fill. There's lots of tradable stuff on a chart that looks like this. There's this chart, NU. I think it's a Brazilian fintech sitting at all-time highs. So there's stuff out there. It's just not crypto right now, right? So you either do nothing, sit on your hands, you hedge, you do something else, whatever. This is BlackRock from Doppel, Justin Mammoth's sentiment cycle. Bull flag up here on BLK. And then lastly, things like CIFR. I still like this chart. You just have to be careful. If Bitcoin breaks down significantly, eventually the miners are going to listen to that like they kind of did on Friday. So it's on the bulls to bring forth bullish evidence here. That has to be in the form of bullish reversal on price. If we continue to just see relentless moves down, it's going to be harder and harder to make a near-term bullish argument. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.